Welcome back, Alpha Hunters. Okay, I am back from vacation. Last week was really nice to have off, except for, I don't know, I missed some major news in the market. Oh, yeah, that's right, Russia invaded Ukraine. So we'll talk a little bit about that. I'm not going to go too much into it. We're still just going to focus mostly on market, what we can expect kind of going forward. But obviously, as we can see, this massive green candle was the day that morning, I guess overnight, between Wednesday night to Thursday market open was when Russia invaded. I actually left that morning, so I wasn't really able to get out much of anything. But it was a clear buy day because you had multiple days down in a row, gapping down. I think we gapped down like 2.5%, 3%, depending on which index or moving average you were looking at. And then it was just an easy short squeeze after that, right? It just people were short all through here, gap down, profit taking, back up. What I do expect going forward here on the near term is, since we have bounced up and we're kind of just in this choppy area, I would expect us just to roll over very slowly, choppily, come back down. I don't even know if choppily is a word, but hey, you know what? It's a word now. But much like how we did here, where we had a nice push higher over just a few days, and then we slowly kind of just broke down, then broke this low, I would expect that to happen as we go down to probably hit 400 over the next 2 to 3 weeks, would be my guess. I don't know. I don't think we get there next week, but sometime over the next 2 to 3 weeks, I do think we'll probably get there. We might go sideways here for the next week, and then break down kind of after that, or maybe later next week we'll start really breaking down. But I do think we'll get down to 400 before we see a more significant bounce, and then I'll probably re-examine, I think I mentioned before, re-examine what I am expecting out of the SPY S&P 500 once we get to that 400 level on the SPY, about 4,000 on the S&P futures. Okay. As far as the Qs go, well, they had a much worse day today than the SPY did, right? If we look at the SPY, it did have some buying come back in towards mid-morning and later in the afternoon, kind of end with higher than it opened. I'll say that. But we still opened down today, so it didn't change too much from where it opened this morning. But that's okay. And tech is the one that is seeing a lot more of the pain. So this is where we'll see a lot more of the selling as it just kind of continues to come in on the market. Okay, that is what I'm expecting. So as the same thing here on the Qs, you know, we've kind of come up, we've gone sideways, and now we're going to push down lower. So we'll see if we do break this low. I would expect we do. You know, if you've been watching some of my videos before, you've known that's kind of what I've been expecting. But now that Russia has invaded Ukraine and all the different issues, economics that itself has brought to the game, is another thing that I'm definitely just a lot more hesitant on being long now, as there's a lot more economic problems that's going to be brought on from the Russia and Ukraine situation. Okay, we will do what we can to protect capital. Is all I can say. So I'm definitely very cautious on longs. You know, if you are definitely wanting to be long on some stuff, I would be long on stuff that is safe haven type situations and stuff that just doesn't look like the market, right? KHC, here I will look at this one real quick. Kraft Heinz looking real good ever since their earnings about 2 weeks ago. Stuff like that, stuff that does not, the chart pattern does not look like the market, I would say is, as long as it looks bullish and the chart pattern is definitely different than the market, that's a good sign of maybe a safe haven you can go get into. Okay. But back on the Qs, so let's look at the monthly chart for the Qs, and then I'll look at the monthly chart for the SPY real quick. So the thing to kind of know here is on the Qs, we have been below this 10. Simplify some things here. There we go. We did get below that 10 exponential moving average last month to close out February. So we did close below it there for the Qs. And if you've followed what I have said before in some previous videos, whenever we do that, we usually do see more downside, and it could be significant downside. Now, my perspective on the Qs on that is not really one that it applies to. I'm more reflective of the SPY when I do talk about that. So I'll talk about that. I'll talk about the SPY and my reflections on that here in a second. But just as far as the Qs, I do think we're just super elevated. I would definitely see some more downside, especially in the medium to longer term. We might see some short-term pops here and there, but for the most part, I think it's just too much overvalue going on in the Qs and the Nasdaq right now. So do look out for more downside probably coming in on the Qs. Okay. The SPY. Let's talk about the SPY on the monthly. So I had put out several videos and even kind of went into some analysis on where we do not want the SPY to close below on a monthly time frame. On a monthly time frame, we did not want it to close below the 10 EMA. Well, we did that. So if you look at the numbers right here, this 10 EMA, the number that pops up there, and then this close number right here. So we can see the 10 EMA is at 437.35. And we closed for February at 436.63. So what does that tell us? Well, really that tells us we can expect more downside. That's all that tells us, right? We saw that happen here. This is the pandemic crash. We closed below it there. We crashed down pretty hard. It actually happened back over here in late 2018. We closed below the 10 EMA, and then 2 months later, we crashed down pretty hard. This time, we actually didn't do it. Now, what I'm going to say, though, is there are few instances where we have been this extended from our long-term exponential moving average. And the last 2 times we did that, we were this far extended from our long-term exponential moving average was back here. This is the financial housing bubble, this area. This is the tech bubble, okay? This is the last 2 times we were that far away, okay? Both times, and when we got below the 10 exponential moving average, we saw further downside, right? So the next month when we did that, we definitely saw more downside. And then back over here in December of 07, we actually closed below the 10 EMA. And then we had the flush down in January of 08. But you notice a few months later, we actually do come back and retest highly into that breakdown area. And even back in 2000, we did as well. We broke down here, we flushed down for about 2 months, and then we bounced pretty good for a month. So even though we have not broken down really from there, and you're not super sure, maybe we just close below the 10 EMA for a monthly once and we'll push higher. Okay, that's fine. You want to hold on to your longs, that's fine. It doesn't mean you got to bail on the ship now, okay? Now, I'm a little bit more protective because long term we are a little bit extended. But if we do break down, just understand, do not panic, and just be cautious. Just be aware that we will get a bounce here over the next 2 to 3 months if we do break down even farther, that you can get out of your long-term positions, right? So if we do come down and hit this 400 level, do look for a push back probably into this green zone. Actually, this green zone will probably be where the market would push back up into, probably in late April, maybe even May. I would look for a push back up into this green zone, and then that would be the clear time that if you wanted to rotate out of stocks, that would be the time to do it. Okay, that is what I'm watching, and I'm going to put out a video next week on like how to manage and trade positions in bear markets, what maybe you should look to do with long-term positions, and then I'll make another video on some of the analysis I just briefly talked about, but I'm going to put it in its own separate video. I've actually covered it in some of these videos, but I want to put it in its own separate video. That way it's just out there for what you can, like how the longer term trends break and what kind of signs that you can identify for that breaking happening. Okay, so watch out for those videos coming next week. But I do think that was the clear sign that we will be going lower, and it's not going to be like a super quick flush down. What's been going on in the past few days? So here on the daily, right? I mean, we just took a couple days to slowly chop down, and we got back down there. We'll probably just slowly chop down over a few days, and then have like a couple days flushing down. So, and I'll leave you with this quick note, okay? Is whenever you start to get these these breakdowns, we just sell down. Whenever you get the quick moves and the flushes down, and we break the previous low, that's when you need to be closing your trades. Okay, if you're short and you're doing short position bearish type trades, not short. I know we got short term, but if you're doing bearish trades, that is the time to close, right? So like this one, we went down, we broke down, and then we pretty much closed like right at this low, and then we gapped down 2.5–3% last Thursday morning. That is the clear sign that you need to close your positions right away that morning. And I actually got stopped out. I told you I did have some protective stops that just got trailed out, like somewhere pretty low down here, because they were just trailing stops. But you know, it is what it is. I did actually have some other trades that I got full reward because they were just so far in the money. They were bearish vertical options. So just look out for, try not to be aggressively long, as a lot of that time frame and those trades are probably not going to work out in your best interest for right now. Okay, what the mindset you need to kind of go into now is start looking for companies that have a great long-term value that are undervalued. Okay, they make money, they're hugely undervalued, and there's no possibility. I'm not going to say no possibility, but the likelihood of them ever going out of business is very rare, right? Food companies like KHC, like I mentioned earlier, man, they like, who doesn't eat food? Who doesn't drink beverages? Everybody does. I mean, it's just, yeah, this is what we do. So, especially in America, it's not even like, oh man, what am I going to eat today? It's like part of our culture and DNA almost. So, try to find stocks like that you very much do like on the long term, and you know, just do option strategies, generate extra income, try to generate some cash flow, because when we get to the bottom here over the next year and a half, 2 years, we will have so many great opportunities to buy long-term assets on the cheap. So if you do appreciate this market breakdown, if you did get something valuable out of it, let me know down in the comments. Hit that like button, and I'll continue to put these out. I'll continue to guide you through this. But if you want a more immediate response from me, just go to the Discord link below, and you know, just come chat me up. It's pretty boring in there most of the time. I try to keep it boring, especially lately. There's not a lot of trades I want to put on, as I'm mostly just trying to protect capital. If I do like trades to put on, I'm going to put them on, and I'm going to let you guys know it. But mostly, I'm also just helping a lot of people navigate this market. And that's kind of the main thing I've been doing a lot lately, is just navigating the market, okay? So if you do appreciate it, let me know, and have a great weekend. Alrighty, take care, Alpha Hunters.